right, everybody. Welcome. How you doing? Welcome to Market Minds. I'm Mike Shorr here from Prosper Trading, filling in for my good friend Scott Bauer. Charlie and I are going to be tag teaming this week, and then actually I think both of us are going to be on at the end of the week on Friday together, so you get a double dip. How's everybody doing today? Welcome. So, kind of an interesting, at least early part of the morning here today. You know, we had PPI come out, one of the few times during the year that PPI comes out before CPI. And really across the board, those numbers were pretty darn good, definitely trending in the way that we want to see it, right? We got good, strong jobs reports last week. And now we get our first look at inflation, and those tick down. And yet, here we are sitting now. We're not down much. We're down about 40 bips in the Qs and about 22 in the SPY. But you would expect that we would be higher. And what I would highlight is, and a good chart to keep, at least until we get a better idea on what the Feds want to do on interest rates here, is this TLT chart. Now, TLT doesn't capture the entire yield curve. It just captures the long end of the curve. But that seems to be where a lot of the play is going on. And we've seen that this thing has just gone straight down. So that means just like a bond itself, that as the price goes down, the yield for that bond goes up. So looking at a portfolio of treasury instruments that have expirations 20 years or greater, we're still seeing selling there, meaning that they're demanding more yield if you want us to take on some more of your long-term debt. And they don't want to take these in the, high fours, low fives. And so they keep selling it down. Until we see this thing turn around, we're going to be struggling to the upside here. Now, like I said, we're not down a whole lot, 30 and 20 basis points for round numbers between Qs and SPY. But given that number, we should have gone higher, which the initial reaction was higher. And then we've just kind of gone straight down, and the market's just kind of meandering down. Now we've kind of sideways down. So let's see how we finish out the day, if this was a sell it to buy it sort of situation, or if the market is really just, really wanting to see what these CPI numbers look like tomorrow morning for a confirmation of what PPI is. That's then really the only story of the day. But you can see that the premiums are still quite high for tomorrow. Q implied volatility is at 35%. SPY is probably in your mid to high 20s here. Let's see where SPY is for tomorrow. Yep, mid to high 20s at 28. So we're seeing some elevated premiums. So they're really going to be looking at this CPI here. All right, how's everybody doing? Thanks a lot for coming by. I wanted to talk about expected value today. Let me pull in, just so you guys can get I know it's a little bit of a big screen here, but I'll have a little blank sheet of paper over here, and we can look at things. So expected value. It's based on the concept of standard deviation. You may or may not know what that is, but it is a statistical measure that's used in all kinds of statistics, from social sciences to physics to trading and everything else, but it's based on a normal distribution. And what that is, and you're going to have to let me apologize in advance for my drawing with my mouse here, and my drawing tool went away. Get that up here. Oh, my drawing tool doesn't want to work. Okay. Well, I'll download it while we talk about it. So what it does is it takes a distribution, and like I said, it would be much easier if we could do this with a drawing tool here. I should be able to get into it. You know what? I'm not even going to try and do it. I should be able, let me see if I can get a pen of some sort here. Oh, I know what I can do. I can just pull this in here just to get a pen. grab any screenshot here. It doesn't matter. Okay. Got it. At least I have a pen here. That's fine. We'll go with that. Okay. Hopefully I can draw. Yeah. Okay. Not really. All right. So we have, your normal distribution, right? Like I said, I'm apologizing in advance for my drawing with my mouse. All right. And so what we have here, this is the price right now. Okay, this is the price right now. And essentially what this says is that a 1 standard deviation move over a defined period of time that you define, about 68% of the time, mathematically, the prices should be above 1 standard deviation and 2 standard deviation, be above -1 standard deviation and below +1, 68% of the time. 68% of the time. About. It's calculus, so there's never round numbers, but about 68% of the time. And so we use that statistical measure as a guide. What is a reasonable move for a given security in a given period of time? We use this for things like maybe we're looking at an unemployment report. Maybe we're looking at like CPI tomorrow. Maybe we're looking at earnings. Or maybe we're looking at some sort of chart setup that we see and where's a logical place and at least something that we can defend why we're targeting a certain area for something. Now, of course, support and resistance levels come into play. And when those things kind of dovetail together, you might have yourself something there. Okay, so that's what a standard deviation move is. Any questions on that? Basically, plus or minus 68%, or 68% of the time, it will be plus or minus 1 standard deviation. Not seeing any questions flying in here, no problem. Okay, so we can use this concept to define I'll just call it a reasonable range for a given security over a given period of time. Okay, and in order to calculate this standard deviation move, there's a quick back of the envelope equation that you can use. You can just take the at the money straddle. If you're close to at the money, for example, we're trading closer to 504 than 505, but we're looking at this is actually not going to be a standard deviation move. It'll be closer to a 50% confidence interval. Let's not get all bogged down with the math here. But for tomorrow, right now, they're pricing in about a $7.33 move in Qs tomorrow. That's just using the at the money straddle. Now you can see we're a little bit in the money, so you're gonna get your values skewed a little bit, but that's why I'm going to show you this little trick here. Let's get rid of these sims. Okay, so we need, in order to calculate the standard deviation, I'll just use SD for right now. Standard deviation, we need 3 pieces of information. Okay, anybody know what any of them are? If you've been listening to me in class, you should know. And if not, that's cool. Okay, we need the price of the underlying. We need the price of the underlying security. We need the implied volatility, IV, implied volatility for said security. And we need time to expiration. And then obviously IV for the said security over that period of time. Because we see, if you look up here in the upper right-hand corners, this gives us our at-the-money implied volatilities for the different expirations. So we can see, like I said, tomorrow, implied volatility is high because the market is expecting a larger than normal move given the CPI and the PPI data that we already have. You can see that as you go out in time, Qs really have more like a low 20, in the 21, 22 range. We see for tomorrow, it's 34%, quite a bit bigger, 50% bigger. They're expecting a move for tomorrow. But given these three pieces, it's a relatively simple calculation. I don't expect you to know it. And but this is a little spreadsheet that everybody in my room has. And we can calculate what this is. So let's just look at SPY and see what type of move that we're looking at for tomorrow. We'll stay away from Qs. Okay, so we know that SPYs right now are trading 580.66. So we'll put that as our price of our security. That'll flow down to here. And we want to look at tomorrow's date. We want to look at the 15th. So we have 1 day to expiration. So we have price, we have time. Now we just need the implied volatility, and the implied at the money implied volatility for SPY is 27.3. We can see that is elevated as well. Usually we're looking in the mid-teens to higher teens for SPY. So you see as we go out in time, but we see tomorrow's 27% compared to just 2 weeks later, which is 22%. We're going out to the end of January, you're looking at 16%. Okay, so given 580.66, close to where we're trading, an expiration date of 115, which is tomorrow, and a 27.3 vol, they are pricing in a 1.43% move up or down, which has a confidence level of approximately 68%. Of course, you would like 100%, you would like 100%, but we don't get 100% moves really, I guess, theoretically ever. But that's a good rule of thumb for how much we're going to move, because other traders are going to be looking at this too, to scalp their gamma positions perhaps, or where they think they might want to take profit on a put that they bought or a call that they bought. Because, to get above a 1 standard deviation move, you are going beyond what the realm of probability is. Remember, we trade in the realm of probability, not possibility. It's possible SPY goes to 0 tomorrow. It's possible that it goes to 1200 tomorrow. Well, not really, because of, but theoretically, the circuit breakers would come in before that. But anyhow, so they're looking at a 1.43%. So that puts us at about the 589 strike to the upside, and the 572, 36 to be precise. But it puts it that's the range that we're looking at. 1.43% up, 1.43% down. Remember that standard deviations tell you nothing about the direction. It just tells you magnitude. What's the probable magnitude of the move that we're looking at? So that's what we're looking at tomorrow. Right now, we're not really moving anything because SPY is down only about 12 bips. So they're looking at a move much bigger than what we had. Of course, we were higher to start the day. Not all that much higher. We're kind of creeping up here this afternoon. So that's the concept. What kind of questions do you have on that? So this helps with, identifying strikes for vertical spreads, identifying strikes for calendar spreads, even iron condors and things like that. And yeah, Mike, do we want to throw out the word of the day? All right, that's coming up here, folks. The word of the day. You guys know it before I do. All right, CPI. What's so big about CPI? Well, the market thinks it's going to be a big deal. CPI. Beautiful, beautiful, beautiful. Okay, so get those in there. Let me see. Is there any questions on expected move? Or also, anyone have any specific stocks that they'd like me to look at? Or any questions about what's going on in the market or what I think? Like I said, we were saying this morning, it would be surprising if we just continued to the downside. We might, we might. I mean, people probably got all bulled up after looking at those numbers, and I think the market was like, okay, not so fast. We're going to sell it to you. Maybe we'll buy it back from you cheaper. Maybe we won't. All right. R1T wants to look at AMD. Let's see what AMD has for us. Let me pull up my daily chart here. You're looking at my day trading charts right now. Now I got the daily chart up here. Let's look at AMD. Now, NVIDIA has been kind of just, it's hard to talk about AMD or it's hard to talk about just about anything without talking about NVIDIA. So NVIDIA yesterday, after getting below its 100-day moving average, got back above, rallied almost up to its 20-day, almost to the penny. And then today it lost that 100-day moving average again. So, as NVIDIA goes, the market goes in general, and certainly the semiconductors. So we look at AMD, and it's a sorrier picture than NVIDIA. They're doing their best to try and hold these lows down at 114.40. $114.40. So they're trading 115.85 right now. And we had that gap down. So although, the only thing appealing about this is that we really haven't been this low since, when's the last time we've been down this low? Back before its big move up, when it was back down there in the 80s and stuff. So we're really pushing these lows. If we look at a weekly chart here, all right, so we're sitting right on the 200-week moving average for AMD. That's significant because the last time we've been below that was all the way back in February of 2023. So it's pushing that. Now you got support here. If it can hold here, then you probably have a decent move back up to maybe the 135 area, just looking at the weekly chart. So that's the only thing bullish that I can say about this. Going back to the daily chart here. The only thing I could say that's good about it is that it's lower than it's been. But we see the 200-day moving average downsloping, 100-day downsloping, 50-day moving average even steeper sloping, and the 20-day moving average certainly downsloping. So if you're a bottom feeder, if you think something's going to go well in the general semiconductor, this is a depressed name that isn't necessarily, a name that you would lump in with kind of your garbage type of stocks. But the semis have been, they obviously had some pressure, and they've, the way that they led things up, they're leading the way things down. So you are at tenuous support here. And if it can't hold this 114.33-35 area, you got more room to the downside. Yeah, we were looking at EIX, Robert. Let's take a look at EIX. Edison, what's the exact name of it? EIX. Edison International. So one of the big power companies in California, rumored to possibly be one of the catalysts for these horrible fires is possibly, there's been a lot of speculation, from natural disaster to arson to down power lines. And so we see that, once these fires broke out and they started talking about that, maybe these down power lines actually, maybe they weren't the first one, but they probably sparked a couple of these, is that, with these above ground lines and a very dry, arid environment, it doesn't take a whole lot to get what we're seeing horribly in LA. And for anybody out in the LA or affected by it, our thoughts and everything go out to you. This is just catastrophic. But again, so now, maybe EIX really had nothing to do with it. Nothing has been determined. But if you want to look at something that we can, closely look at this as, we can look at Hawaiian Electric when we had those horrible fires there over on Maui. Well, Hawaii Electric, you can see when the fires came, right? I don't even have to go and look. So August of 2024, you had, it's gone from, it's cut in half. Didn't quite get to, almost half. So, if you're looking at, and it still has not recovered. So if you're looking at the closest things that we can get from apples to apples, when an electric company is possibly, and we've seen the same thing with PGE, with those fires in Northern California a few years ago, that, they're always looking for someone to blame. So not only are you looking for the actual cause, you have a PR problem too, right? Because human nature, somebody wants to blame somebody for something that can't be what they did. And so, I have no idea what the answer to this, this horrible problem that we have there is eventually going to be. But at the very least, one of the key people they're going to be looking at is EIX, and who's going to come into EIX. I know that that Edison's CEO got on CNBC yesterday and said that their losses, that this huge move of, it was close to $10 billion of market cap came out of EIX, and that it was unfounded because, let's say that they had $10 billion of damage caused by whatever they did. He said, and I don't know if this is true, but he said that they only have a little bit more than $3 billion of capped exposure. So that's something that is at least giving some credence to maybe the bleeding is stopping here. Again, it's a hard one because it's a PR thing. Just the same way that, that every time, a plane gets grounded, that comes out as a Boeing headline. Everybody, it's a hard thing to psychologically get over. So, I mean, that's a tough one. If you are, boots on the ground type of stock analyst, familiar with the power grid in EIX, maybe you have some insight into that. That obviously goes above and beyond my pay grade. But that's the type of thing that you're looking for. And exactly what Robert said, PG&E got sued, and now you're paying higher rates for electricity. They're just going to pass that through. Or they have to do a huge capital investment to put these overground power lines underground. You can imagine what an undertaking that would be in the LA area, much less anywhere else. And there's going to be lawsuits and everything like that, and that's where, in the long run, I think that you're, and I mean, I don't know how long, 1 year, 5 years, 10 years, this is probably overdone. But as for a trade, really hard to kind of pick, and where is this falling knife going to stop? And until, I mean, we have zero information saying what even caused these fires. An obvious place to turn would be the electric company, though. Thank you, Mike. Final call for word of the day. The word of the day again is CPI. Let me see. Did I miss anybody? Oh, J&J. Sure. Let's take a look at Johnson and Johnson here. Johnson and Johnson. Uh, well, I mean, again, really hard, to try and pick this out. We do have earnings coming up here in J&J exactly on the 22nd. Small piece of trivia. That's my brother's birthday. So we have earnings coming out here. So you have to keep that in mind if you're going to make any sort of play. So we came all the way down. We can look at this on a wider time frame here on the weekly. So we actually breached these lows here at 143. We got down to 140 and 60 and change. So again, really getting down there to, last time we were down in this area was back in 2021. So it's really down there. Again, I don't see anything bullish about this other than it's lower than it's been. I don't see really anything much turning. It tried to yesterday and tried to overnight, and then it got up to about 145, and now we're sitting down here at 143. Again, not a big mover. J&J, usually low implied volatilities in the high teens, low 20s. So not really seeing any sort of turnaround. If I were going to be looking at anything, you'd probably have to wait for the swing high here at 145.21. And then you got this swing high here. I mean, really, you want to probably clear 147 and change here, 147.15 or something like that, with a target, where this drop came, 50-day moving average up at 154.30, something like that. That's on the weekly chart. But I'm not seeing really anything that's telling me, okay, the bottom's in and we have a nice solid base here to build off of. We have a little bit of support down here. That's about it. And we have earnings coming up. You got a little bit of time, but that's for, if you're going to try and hold this for more than a couple weeks, you're probably going to want to have to wait until after earnings. And Raphael asked about JP Morgan. Should be interesting now that we're going to start getting these banks rolling in, because they are tomorrow before the open. They're holding up here right now. So, the interesting thing is with all these banks, you're going to think and hope that they're going to talk about their bond portfolios, because obviously what we were looking at in TLT, the longer end of the treasury yield curve is being hit really hard, meaning those interest rates are going up in the back end. And what's their exposure and how are they put towards that? I know Bank of America, I believe late last week I was reading something about that they are, in their estimation that they were overloaded in the back end of the curve, and they were going to be lightening up on that, which we're seeing in the market, that there are some sellers in the long end of the curve, which means long-term yields go up. Right now, we're just in a consolidation. They did well last earnings, did very well. The earnings before that, a little bit of a dip and then a rally. Earnings before that, they actually came off. So over the last year, we've had 2 up and 1 down in longer terms. We're towards the higher end. We still have our ATR here above, and again, this is earnings, so maybe some sort of iron condor that you'd be looking at, because we have vols that are quite a bit higher. If you're going out to the longer end of your implied volatilities, JP Morgan is usually about a 24, 25 vol stock. Trading about 32 right now for this week. So obviously they're looking for some moves here. So maybe a strangle swap or something like that, or an iron condor or credit iron condor that we're going to stay in a certain range. I'd have to do some more rigorous analysis to actually figure out what if anything, I would do in that. All right, the wheel is closed. Let me see if I can bring up the wheel. All right. All right, we got a lot of names on here. All right. Should we go with it, Mike? Are we ready for the wheel? Are you guys ready for the wheel? All right. I'm going to spin. How many are we doing, Mike? One winner? One winner today. All right. Here we go. And we're rolling. Oh, who's it going to be? Is it Sanaz or is it Nancy? It's Nancy. A fellow STOer. Welcome, welcome, welcome. All right. Nancy Fox is our winner. All right. Beautiful. All right. We looked at JP Morgan. Like I said, that's a tough one that to because we're just consolidating right now and we have earnings. So we could really go anywhere. If we do take out this gap, the bottom of this gap here, I think you have more room to the downside than the upside. One, just kind of the uncertainty of interest rates in general right now, and especially trending higher, how they're positioned for that. And if they take out this gap, well, then you got this gap from down here. I guess really the gap would be all the way down to 226. So from 234 to 226, it's got some room to the downside. Plus, it would be losing its 50-day moving average. So I think if I had to skew one way or the other, even though I think JP Morgan is a very well-run institution, just the way that things go, stocks go up, stocks go down. All right. Did I miss anybody's question or any question or any other stock that you'd like me to look at here? Or any question about expected move? And I'm sorry if I missed it through the chat. I'm kind of toggling back and forth. All right. If there is nothing else, well, I want to thank everybody for stopping by. Come and see us. It looks like we're rallying a little bit here. SPY's got up to the VWAP. Q's got a little bit more to go before it gets there. They're right at unchanged now. Markets go up, markets go down. Everybody, thank you so much for coming and stopping by with me. I hope to see you in the STO room. I'll see you again here on Thursday. And then Charlie and I will be doing this together on Friday. So have a great rest of your trading week. Good luck with CPI tomorrow. And I will see you in the room or I'll see you here Thursday. Thank you so much.